Welcome to Primary Markets TV, your insight into newly issued securities across the fixed income and equity space. I'm Ruth Emery. Joining me today is Noelle Cazalis, a fixed income manager at Rathbone Investment Management, and we're going to be talking about green bonds and the Grenium. Noelle, welcome to the show.
Thank you. Thanks for having me today.
Can you explain to us briefly what we mean by Grenium, and is the Grenium real?
What we mean by Grenium is very simple. Is when we look at the green bonds and it trades at a premium to its conventional counterpart. So, for example, if you have two bonds from, let's say, the same issuer, same maturity, same credit rating, and the green bond would trade at, let's say, a spread of 90 basis points and the conventional at a spread of 100. The difference, so the 10 basis points difference, is the Grenium. So it's a kind of premium that is associated to a green issuance, and it's often associated to a scarcity premium. So if you think about the green bond market, it's grown pretty much 10 times since 2013, but it's still very tiny compared to the overall bond market. So we continue to see that scarcity premium. And one of the obvious examples that we had last year was in the German Green Bund. So effectively, they issued a green bond which traded at a lower yield, but also with lower volatility than their vanilla equivalent. And hopefully, that does encourage government to come to the bond market and issue more finance for the greener projects. We're going to have, in fact, the UK first Green Deal this summer, which is something we've been pushing for quite a while. The UK Treasury for many years has been pushing back green issuance because they felt that it wasn't providing good value for the taxpayer, which is ultimately their remit. So the fact that they're now thinking of coming to the bond market with, minimum issuance of 15 billion this year, for me, that is showing that the Grenium is real. And there's a lot of data that is backing that up. I look in particular at data from the Climate Bond Initiative, and we see Grenium, in euro, but also in dollars, so in different currencies. So you see basically at new issuance, higher book cover than for conventionals or vanilla bonds. And you also see better performance on the secondary market.
Mm-hmm. And where do you see the highest Greniums? Is there a particular type of bond or sector or market?
Not really. I think it's really broad-based. This phenomenon has been in different currencies and different types of issuers, whether they are corporate issuers or sovereign bonds. But I would say it's really accelerated with the COVID crisis. We've seen really a surge in demand for ESG funds, and that's therefore translating into higher demand for green, social, and sustainable bonds. So we're seeing the same trend actually for social bonds that we've seen for green bonds for a number of years.
Mm-hmm.
We've seen book covers of 3 to 8 times oversubscribed. So that's really significant and really give the issuer an advantage and a reason effectively to tighten that spread of issuance. And to give a little bit of color there, NatWest, I think, did some research last year, and they calculated the Grenium at 15 to 40 basis points for financials and corporates, which if you think about the low rates and low yield environments, this is a really significant reduction of the cost of funding for some of these corporates.
Mm-hmm. And do you think the green premium will last, given that we're going to see a lot higher issuance of green bonds this year?
Of course, if this issuance, comes very quickly, you can see in the short term this premium being eroded. And I think some research actually points to that in the first quarter of 2021, where we've seen that Grenium reducing and some even calculating that Grenium at zero. But longer term factors suggest the Grenium is more likely to persist. For example, the imbalance that we're seeing between supply and demand. So total issuance of green bonds is now over 1 trillion, which is great and a great milestone that the market, has reached.
Yeah.
And in Q1, actually in Europe, green bond issuance was about a quarter of the total issuance that we've seen. So it is significant.
Mm-hmm.
But I would argue that it's not fast enough to meet the demand. So that's the first thing.
Mm-hmm.
The second thing to consider is what central banks are doing. So last week, for example, the Bank of England published a consultation paper on how to green their corporate bond purchase scheme. And it looks like effectively when it would be available, they would start buying green bonds as part of their mandates. But also they might be thinking of tilting purchases toward what issuers with more credible path toward net zero. So we really start to see central banks thinking of helping the transition. And that's just the UK, but a very similar trend at the ECB level. And the third thing that I think is going to encourage that Grenium to stay is that we are likely to start seeing investors rotating out of brown assets.
Okay.
And the bonds from dirtier industry or brown companies start to underperform. So you could see actually what we would call the Grenium appearing, which is it would penalize effectively companies that are not, planning for the transition. So I think that's going to be quite interesting to see how that evolves. Regulation is really accelerating that change, I would say. So this year in the European Union, we have SFDR, which is a Sustainable Finance Disclosure Regulation. As asset manager, we face more and more scrutiny as to, the role that we're playing in the transition. So yeah, I think if you look at the regulatory landscape, the potential Grenium that is appearing, and the fast increasing demand for this type of asset, I think the Grenium is likely to stay.
And how can issuers maintain the green premium with their green bonds?
So I guess the first thing is they need to remain, credit worthy. When I look at a green bond, I don't just look at the project to finance. I look at the issuer and their cash flow and really much do the credit due diligence. It's no point for us having something nice and green in the portfolio if the company is going to start to underperform or even worse, default, because, we're really skewed to the downside. But I would say apart from that, it'd be around additional reporting. I think that really helps on the green bond side actually to build and maintain credibility as an issuer. So it helps us to understand what the proceeds are financing. And I think that transparency really goes hand in hand with the Grenium. So yeah, what I would like to see, I guess, from issuers is that they take steps to ensure that, adequate reporting is in place, and perhaps second-party opinion from recognized players, Sustainalytics, always give us an extra layer of credibility in a way.
And how prevalent is greenwashing in the bond space? What could ultimately happen if a green bond was revealed to be anything but green?
It's very difficult to quantify. I mean, it is difficult to define what is green and non-green for different investors. For us, what is really key is to do our own research and ensure that what we are buying is really meeting the criteria and the ethos of our funds. But yeah, it could have really damaging effects if you get caught into greenwashing. So I guess it has risk for both the issuer and the investor. For the issuer, you lose your credibility, and it can have very important implications for your cost of funding. And I guess for the investor, the first risk is underperformance. So 50% of holders of green bonds are green investors.
Okay.
So if everyone is trying to get out of the door at the same time, it can have really big implications for performance of these assets. So yeah, it could be very damaging, I think.
And do you have any tips for issuers that are considering issuing a green bond?
I'm not sure there are tips, but just perhaps word of encouragement. So please engage with investors, try to understand, what works for them. It is a little bit of an extra effort when you start issuing your first green bond in terms of identifying projects, setting up the reporting. But I would say the market now is really well established. It's kind of like a well-oiled machine. So it's a lot easier than a couple of years ago.
Yeah.
Transparency is key. The more information and access to management we get, the better. And the easier it is for us to understand not only the investment case, but also the rationale for issuing a green bond. Mm-hmm. And also what really helps is committing to this market. So not only just be like a one-off issuer, but when we see issuer coming back to the market, I think that's when management teams start to see the benefit of it, because the second time around is a lot quicker to raise funds. And for us, again, that kind of shows that commitment to this market.
That's been brilliant. Thank you so much for your time today, Noelle.
Thank you.